What is happening, everyone? It is good to be back with you. My name is Mark Rushin. I'm a CPA here in the state of California, and it is great to be back for Stock Market After Hours. It's been a couple weeks. Had a bit of a vacation last week. I was up in the Central Coast, California area, up in Pismo Beach. So, any of you out there in the Central California area, hello. I was out there camping with the family. And then the week before that, we had a webinar focused on our stock market kids. So, it's been a few weeks. Missed you guys, back with you. A lot to get through here today with Nvidia earnings, CrowdStrike earnings. We had Okta earnings the other day. In the past week or so, we've had Home Depot, Lowe's, a number of different companies. So we're going to try and touch on a few, look at some charts, see where the market's at as a whole, give you kind of my take on the Fed, things like that, and just go from there. So if you guys have questions, this is meant to be interactive. If this is your first time joining one of our Stock Market After Hours, welcome. It's great to be with you guys here today. So let me know, what have you guys been buying? Have you been buying anything, selling anything in the past few weeks here? What changes have you guys made to your portfolio? Plenty of you know that if you are an Edge Plus subscriber, you get access to my entire portfolio, and you get alerts anytime I buy a stock, anytime I sell a stock, ETF, things like that. And then we have our Options Edge Plus as well, if you're interested there. And we have just been absolutely crushing it over at Options Edge Plus. I always like to show everyone just one option contract that I'm doing in a particular strategy. But again, I'm doing multiple contracts in my actual portfolio, but allows you to see, okay, what could be my profit? What could be my potential loss? What's the strategy here? Do I want to do multiple contracts? But had you have just followed us for one contract, over the past 3 weeks, we've been averaging around $700 to $800 per week, just following in on one particular contract there. So definitely check out, we have our Labor Day sale that is just starting here today. So make sure you're mindful of that. So awesome. Well, let me check the comments here. Who's tuning in right now? Positive Planet from SoCal. Look at that. We got a neighbor in the house. What part of SoCal are we in? Nvidia growing global partnership, AI sector Q2 earnings beat, AI robotics, AI tech, EV vehicles, and more. We're definitely going to be touching on Nvidia here today. Oakville in Canada holding a large number of Nvidia covered call ETF units, feeling scared while looking at the after-hour markets, which right now, just to kind of give you guys a update on where things stand as we're talking live right now, we're down about 3% in Nvidia after hours. So no crazy move one way or the other there. All right, Cole, is there something deep inside Nvidia earnings causing the stock to drop? Or if this is just an overreaction, data center revenues was down, no chips sent to China. John Berkshire, my friend, good to see you. By a little IGV. Someone watched the video that we put out this week. Matthew, good to see you. Obina, hello. How are we doing? We got the fishing crew here. We'll await the market reaction to revised labor data that comes out on September 5th before buying IBM. Buying a little SU, buying some Costco. Costco's been a bit of a struggle bus here of late. Hello, it's Dishpal from Leicester, UK. Hope I said that right. At least the market's recovering. Portugal's in the house. We got Maryland, Brazil, San Diego. CPA from Louisiana. Good to have you. Jello from Portugal. Hi, Mark. Last video talked about VIG. I was wondering if I own VOO, SCHD, and VYM, if VIG makes sense, or should I just double in on those? Well, it's going to definitely speak to what are the other things in your portfolio, but to kind of give you a sense of what I have in my portfolio, I have VOO. Technically, I have SPY, not VOO, same thing. I have SCHD as a core position. I have some VYM, not a core position, but I do have VYM and VIG or DGRO. You can kind of go either route there, but there are similarities to them, but some key differences. So like we talked about with SCHD, not a lot of technology there. Technology has kind of moved its way into the top 5, but it's not a huge weighting there. So let's say you had a portfolio that was filled with S&P 500, the QQQ, SMH, and then individual Apple, Nvidia, Microsoft, and just really tech heavy, then maybe VIG and things like that is just going to further add to that tech exposure. So you got to ask yourself, do I want that much exposure to one particular sector, or is something like SCHD a little bit better? Although we know technology has been roaring, which is why SCHD has been kind of held in check this year and last year per se. but it's going to offset things so that when stuff does hit the fan, when we go through some periods of volatility and technology and big money managers decide to take some breather, there's going to be SCHD to kind of lift the boat up a little bit. Doesn't mean it's going to provide, growth for your entire portfolio, because we don't invest in SCHD for huge amounts of growth. We're not expecting 20, 25% returns. It's the 4% dividend. It's the 13% dividend growth, 13 years, consecutive years of dividend growth there, and just a stable core holding there whatsoever. Hopefully that helps answer your question there. Brunner, Laguna Niguel, not too far there. That's a very close neighbor. How we doing, Gary? Portugal in the house. I think we had a couple Portugal so far. DRC is in the house. Nice. Israel's in the house. Philadelphia, Yuma, Arizona, the Netherlands. Love it. I got some Dutch in me. If you guys knew my height, you would know that I'm probably Dutch, as you can't really tell since I'm just always sitting behind a camera here, but I am 6'7". So some serious height there. That comes from the Dutch side of the family. New York City here. I'm thinking of Kohl's is the next GameStop. Yeah, those are ones that I just don't care to mess with all that much whatsoever there. Hi, Mark. Are you familiar with Serve Robotics? Not one that I'm all that familiar with, so probably not going to comment on it. Nandy from Toronto, Canada. Everyone's talking about Nvidia. Snowflake did great after hours. Snowflake did. Nvidia, not so much. So not terrible, though. And we'll get into that here in a second. Any recommendation for a semiconductor ETF? I mean, the most popular one that's out there is SMH. I love SMH because, number one, it gets you that core semiconductor exposure, but at the same time, it's a great ETF to utilize options on. And I love to do options on a weekly, monthly basis. So that's one I'm in and out of, usually do and through options there. So awesome. UK is here. Love to see it. All right, so let's jump into the markets and see where have we been, where are we going, and jump straight into what we have for the day. So hopefully you guys can see my screen here. We'll start with our Dow Jones. So again, not one that I pay all that much attention to, just because of the way that it's built as a price-weighted index. Over the past 5 days, up about 1.5%. Over the past month, 2.5%, 8.2%. And then year to date, we have 7% so far on the Dow Jones Industrial Average. Turning over here, we could see the S&P 500. So the S&P 500, now that is something that I'm more focused on. On a year-to-date basis, we're right around 10% right now. We'll see how Nvidia sways that a little bit here tomorrow if the after hours does hold up. And again, if you are invested in Nvidia, or you're thinking about investing in Nvidia, or you have option plays invested in Nvidia, never let the after hours kind of sway you one way or the other, because we want to wait till the true volume gets into it, which is going to be tomorrow. I couldn't tell you how many stocks that I've seen issue earnings down after hours and up the next day, or up after hours and down the next day. So don't let after hours sway you all that much there. Over the past 3 months, though, we could see that most of those gains have been right then and there for the S&P 500. And then turning over to the NASDAQ, the tech-heavy NASDAQ, that's outpacing the S&P 500, up 11.8%. And over the past 3 months, it's been on a roll, up 13% right there, up just 2% in the past month alone. So a lot of those 3-month ones are that rally that we saw a couple months back there. So that's kind of where we're at in the three major indices so far. Let's take a quick look here at the sector performance. So I usually like to go to let's go to Fidelity sector performance is usually all I type in. That'll bring up where we're at, because that's going to tell us, where have money managers been spending their money. And we can tell a lot around the direction of where the economy is going to be heading based on which sectors are performing well. So let's look and begin with a year-to-date basis here. So we can see that healthcare is actually the only sector in the red so far in 2025. Energy is right above them, and consumer discretionary. So we're kind of well split. And this is something I talk a lot about on our live show, is the fact that we are looking at a broad rally, call it. I mean, we're up roughly 10% on the S&P 500, and we have 6 separate sectors all outpacing the S&P 500. Those are things that you want to see in a healthy bull market. Now, that doesn't mean we're not set up for pullbacks because there's obviously other elements that go into it. Is it valuation? Is there valuation concerns? Seasonality with us coming into September here in less than a week. We're going to be turning the calendar into September, which I've kind of, beaten the dead horse on a million times for you guys just to have you prepared that September is historically the worst month. It's not even close. The worst month. Why does it usually happen? It's not just people just hit the sell button. It's because we are now through 8 months of the year. We know if our portfolio is up 30%. We know if our portfolio is down 20%. We need, as investors, to start thinking about taxes, something none of us enjoy thinking about. But if we're sitting on 30% gains in a taxable account, no one wants to pay taxes on those. So if there are positions within your portfolio that may not necessarily be ones that you're all excited on, but trust me, I've heard it a million times from folks, on students that have come through my 6-week program and things like that, is the fact that they're saying, oh, I just want it to get back to break even. I made a bad investment on this one. I didn't really understand valuation. I just jumped into it because someone said this was a good buy. It just didn't work out. And it's not something I really want to hold in my portfolio. So if it could get back to even, I would be interested in selling it. But when you think about it from a tax perspective, instead of waiting around, because it could in fact fall further, and if it's already something you're not excited about, how about you utilize that for tax purposes? You can offset gains that you have with losses. And your portfolio could be up 30% right now, and you could theoretically pay no tax on them through the use of tax loss harvesting. Now, if there are positions in your Roth IRA and things like that, that's meaningless there. So you don't have to sell anything. But the idea is the fact that folks are going to start thinking about tax savings here. And September, we've got a bunch of data. We're headed into the last quarter of the month. At the same time, these big hedge funds have to show at the end of September what was their holdings, what was the portfolio for the Warren Buffetts of the world and the Bill Ackmans and so on and so forth. So they can move their portfolios around all quarter. But on September 30th, at the end of that market close, they need to take a snapshot, and that's what they're going to show us 45 days from now. So that's kind of where we sit. Let's take a look back and see what has been working more recently. So over the past 3 months, we could see technology and communication services. So we just looked at year to date, but now when you look at the past 3 months, this looks eerily similar to what we saw in 23 and 24. It's a 2-horse race pulling up the entire market. We are sitting at 19 and 15% gains. The only 2 sectors outpacing the index as a whole. Now they have large weightings in there, so they're going to pull everything up. But at the same time, at least everything is green. So from a breakdown perspective, I like what we see right there. Now, when we get into valuation, we're going to be jumping into the Fed here in a second. Then we're going to be jumping into earnings for Nvidia and CrowdStrike. So make sure you stay with me here. But when we're thinking about a valuation perspective, we have to be mindful that we are sitting at extreme highs in the S&P 500. And I talk a lot about it on this live show, is the fact that technology companies are becoming a larger weighting. So it makes sense. There's a story that can be built there. But over a 10-year history, the S&P 500 has traded around 18 times. Right now, we're sitting closer to 22, 23 times when you look at next year's earnings growth. But there's a lot of things that are priced into the market already. We've heard the Fed talk about September rate cuts that are likely coming, 25, potentially 50 basis points. I believe it's going to be 25 basis points. That's priced into the market. That no longer is going to surprise to the upside. When they cut, no one's going to go, oh, holy smokes, let's go buy and send the market soaring from here. So that's priced into the market. The growth rates are what they are. They haven't been changing that much. And there are high expectations for 2026. So if growth slows and the expectations are already high just to meet those, let's say growth slows a little bit, well, that's a surprise to the downside. So you have to start thinking about it from an investor standpoint. Are there more catalysts to the upside right now? Or is there more catalysts to the downside? And anytime you go into, especially an earnings season, and the bar is set so high, you could have a blowout quarter. Nvidia has done it a ton of times. I've seen Meta do it a ton of times where they blew away expectations. And then their guidance was kind of light. Stock went down 13%. We're seeing it with Nvidia, beat on revenue, beat on EPS. Stock's down 3% after hours. It's not growing as fast and things like that. So we're going to break it down, but there are a lot of factors to be mindful of. Now, that doesn't mean we go out and sell everything, but take a fresh look at your portfolio. Wow, I've really been riding this wave here in these particular stocks. I have huge gains. Again, with many growth stocks, those aren't true gains until what? Until you finally click that sell button and ring the register there. And remember, back in the year of 2022, there are tons of high quality stocks that fell upwards of 75%. Nvidia, CrowdStrike are two of those companies. Tesla, where you just saw gains wiped away rather quickly. So they look good on paper right now, but there's no gains until you hit that sell button with a lot of these growth stocks. So do be mindful of that. And while we're on the topic of talking about valuation, let me take a second to tell you guys about my 2-day valuation workshop. If you've been, you're new to the market, you've been investing for a few years and never really come up with a plan with how to evaluate companies, both analyzing as well as going through valuation, this is going to be a great boot camp here. It's a workshop where we're going to dive into growth stocks, dividend stocks, show you how I behind the scenes on how I jump in and analyze these types of companies here, because they're very different one over the other. REITs are very different from more traditional stocks and things like that. So it's a 2-day valuation workshop. It starts tonight. We do have 4 spots that are open. If you're unable to join us live, that's okay. You still get the recording from that perspective, because I know a lot of folks overseas always join our workshop. So it's not like, we sell out at 50 seats and we're going to have 50 people in there live. No, plenty of people are able to go back and take it at their own pace and reach back out with any questions that you might have. So there's a link down in the description below. If you want to jump into one of those last 4 seats, it'll be starting at 8 p.m. Eastern time, 5 p.m. here Pacific, today, and the same time tomorrow. We're going to go for roughly hour and a half, depends on how interactive the group is on how long it goes. Sometimes they're short, sometimes they, in terms of an hour, sometimes they're longer and they run about an hour and a half. But again, if you can stay the whole time, fantastic. If you can't, you will get the recording. So definitely check out that link and we'll hope to see you there. So last week, we got our Jackson Hole meeting, and the Fed came out where we had the big money managers, the money gurus from all over the globe come together in Jackson Hole there. And Fed Chair Jerome Powell, this was his last hurrah on the out in Jackson Hole. So he gave out, and it wasn't all that surprising, but he gave his normal conference out there, indicating that rate cuts are likely coming. There are still concerns that he mentioned. There is still uncertainty around some of the tariffs and things like that, because there's plenty of countries that deals still need to be worked out with. We have seen in the data that inflation is still starting to creep up slowly. It's not all that concerning yet, but there are indications, if you look at core CPI or PCE and things like that, that did creep up. And when you look at the super core, there are a lot of inflationary items around services and things like that. So that could give some investors some pause on how that could impact that huge earnings growth. That's what I'm talking about in over the course of the next 12 months. There's plenty of factors there, but we are too tight right now in terms of monetary policy. The job market is still okay. I wouldn't say it's phenomenal, but I wouldn't say it's weak either. So it's still okay. So it could be a spot where we start to slowly cut rates a little bit and bring that rate down a bit. So if we go over to our Fed Watch tool, we can see that the September 17th meeting. But it's interesting on what we're seeing right here is how things have changed. If you go back to our live show just a few weeks ago, we talked a little bit about, and we looked at this CME group, the Fed Watch tool here, and it was around a 90+% that we would get a 25 basis point cut. But the difference, the other 5%, was actually looking for a 50 basis point cut. So there was another column over here to the left. But now, 2 weeks later, we're still very high, close to a 90% probability that we will get a rate cut, just 25 basis point. But now the remainder has flipped to now around a 12% that we may not get a cut at all come September time period here. So things have kind of flipped a little bit, but it's still a strong probability that we will in fact see a rate cut come September. I am in that camp there. But when we look at the probabilities moving forward, and over here you can see the next meeting date. So we only have 3 meeting dates left for the Fed: September 17th, October 29th, and December 10th. The blue is kind of where the majority of the probabilities are. So a 90% rate is that we will get a 50 or a 25 basis point cut. And then we could see it's around almost 100% that will be around that same level, if not another 25 basis point cut in October. And that's kind of where we're ending right now. So ideally, the market is pricing in 2 rate cuts for the rest of the year. And if you go out through the remainder of next year, we're kind of going to see some sizable. It's going to start really picking up in 2026. So there's a lot of people that can get all excited about rate cuts. It's going to make the borrowing costs a lot easier. Hopefully it'll bring down mortgages over time. It's usually not something, mortgage rates don't just follow because of what the Fed is doing. Sometimes you actually see a pickup in that. But at the same time, when the Fed is cutting, it is to bring down the monetary policy rate. But at the same time, it could be due to a weakening economy, or it could be due to a weakening jobs market, which wouldn't pose well for the stock market from that perspective. So it is in some shape or form good for businesses. But if we see businesses and the economy start to or not do well, it's not going to bode well for the stock market moving forward. So yes, it's definitely going to help small caps in the near term, but if the economy is not doing well, it's all for nothing from that standpoint. So, alrighty. So let's now jump over to fiscal.ai and let's take a peek at there we go. Let's look at Nvidia. So let me refresh this really fast. So right now with Nvidia, so let's start fresh here. So if we go to Nvidia, we can see we're sitting right now at 3.1%. Let me take myself off the screen so you guys can see this a little bit better there. There we go. So Nvidia is currently sitting at 3.1% after hours right there. So not much change since we started. Again, if you're not yet using fiscal.ai, you can check out the link down in the description below. This is the exclusive platform that I use when analyzing, researching stocks. It just makes it so easy, and you're going to see how we can build out a lot of things right here. So as you can see, over the past 5 years, the stock price increase from, again, they did do a stock split a while back. So adjusted split, $13.60 roughly 5 years ago. And now we're looking at a stock price we'll call it 180 for right now. But I think, when you switch this into market cap, it is just astonishing that 5 years ago, this was a company sitting around a $300 billion market cap. And in today, we've added $4 trillion in just 5 years. That is pretty wild to think of from that standpoint there. So adding 4 trillion, it is just mind-boggling there. So, all right, so let's jump over let's go to our investors relations section first. And this is going to come out immediately here, guys. Right when this drops, you will be able to see it in fiscal.ai. So you're able to you can go to their report here where you can see their second quarter that they just issued, and we'll go through these here in a second. But if you're like, hey, I don't really want to read all of this, or I don't want to go through all the Q&A session of the meeting, no problem. You can just hit this AI summary button. You saw how fast that was right there. It's going to summarize it for you. Boom, there you go. That summary is done. It went through the key points of that meeting. You could also do a custom summary if you wanted to, if there were certain, how many times was the word data center used? You could type in, if I'll do this for tariffs, if I want to see how many times tariff was mentioned, or recession and things like that. We could see the phrase data center was used 13 times, and they'll go through those quotes there down below. So, but I usually use the AI summary for the most part there. So we can see revenues came in at 46.7 billion. That beat on analyst expectations. That was a 6% rise quarter over quarter, and a 56% growth. The fact that a $4.4 trillion company is still growing its top line revenue at 56%, that is quite astonishing there. I think the data center revenue is kind of what I guess you can call it shocked investors a tad here, and that makes up the majority or a good piece of it. Gross margins, just absolutely stunning, 70 plus margins. I mean, if we're above 40, 50% margins, I think that's a fantastic company, but we're talking about 72. Non-GAAP EPS came in at $1.05. That was more than analysts had expected. And this is something that is just now starting to be talked about, is they announced a $60 billion repurchase program there. So again, huge number there, but it's also a $4.4 trillion company. The keynote to think or to note on this, the keynote to note, I don't know if that makes any sense, but the thing to note is the fact that no H20 sales were made to any China-based customers in that second quarter. So the quarter that they just reported here, Nvidia did not have any of those sales in there. Also, if I go down to guidance in their outlook here, revenue is expected to be $54 billion, but at the same time, the company has not assumed any H20 shipments. And again, that was that trade restriction that the U.S. put on China there. So if that does open up, this number is just going to go higher. So that's definitely very bullish for the likes of Nvidia there. So revenues 46.7, data centers up 41 billion. Blackwell data center revenue that grew 17%. So that was fantastic there. So into some more of these notes. Operating income, again, those are the things that I care more about rather than the headline revenue EPS numbers. EBITDA is a key thing for me. So a lot of great things to notice here. But can we say things are slowing? Sure, you could say things are slowing, but you still have to put them into perspective. We're still growing top line revenue at a 56% clip there. The company also announced their RTX 6000 Blackwell server and a bunch of companies that'll be partaking in that. Something to note there. So wasn't so much, again, the earnings that they put out as it was the forward guidance. So if we look at it from a valuation perspective, and that's what more of us care about right here. And again, we can look at total revenues, and we can look at, let's say, I mentioned to you guys, operating profit was important. And let's also throw in operating margin. You can, within fiscal.ai, you can kind of build these however you want to. And again, I don't want to look at all of those years. So let's break it down just over the past, say, 5 years. So we'll do it from January 20. Right here, we can see how things are going. So the green one is going to be our revenues. So just 5 years ago, we had revenues of 10.9 billion. Today, those sit at 165 billion over the last 12 months. If we look at operating profit, that was sitting at 2.8 billion just 5 years ago. Today, it's sitting at $95 billion. So it's just fascinating that you just look from a operating profit and go back just 2 years. The company today, over the past 12 months, has more in operating profits than it had in top-line sales all of 2023. That is just fascinating. That just speaks to the growth of this company. So when people say, wow, the stock is up, 4,000% or something wild like that, they have the numbers to kind of back it up from that perspective. So, I saw this on a chart here. Let me show you the 5 years. They're up 1,300% over the past 5 years. That is hard to beat from a company with the size of a $4 trillion company. I always like, good old Seeking Alpha here talking about, anyone can post on Seeking Alpha. Just so be mindful when you're reading that type of stuff. Why this post earnings dip is a buying opportunity. Okay, buddy, we're talking about a stock that's up 1,300%. Let's not act like the stock's down 30%. This isn't a massive dip, buy the dip, down 3%. Let's not overreact here. This is not a, run and buy the dip. This is going to be a once in a lifetime opportunity for you. No, when the stock dropped to around 100, that was a dip. When we went from 140 to 100, put out the article there, not when the stock's down 3%. Okay. That's just clickbait material. So, which is like why I always like to perform the research on my own. Never do it based on what someone else says. And this is coming from someone that puts out content on YouTube. Even if I talk about 3 stocks, 5 stocks, 10 stocks, it's still important to make sure that you do some due diligence to ensure that it meets your strategy, helps you get towards your specific goals. And that's what we'll be talking about in the valuation workshop. Again, 2 days. One-on-one with me. I should not one-on-one, but group setting directly with me. I'm not passing on to any other teachers or anything like that. I am teaching the class. So again, we had 4 spots at the start of this. I don't know if any of you have signed up yet. It will go blank once those 4 spots are concluded there. So if it is something you want to partake in, the 2-day workshop, here we go. Make sure you click that link down in the description and get started so that you can get joined. All right. So that's where we are with Nvidia. Now let's go take a look at, or we were looking at earnings. So now let's get rid of the stuff that we were looking at, and let's look at some actual valuation. So forward PE, how about we look at, let's just keep our forward PE for right now. And let's put a average out there. So right now we have the stock, remember our Seeking Alpha friend, buy the dip. We have a stock that's trading at 36.3 times is where they're at right now. Now, again, if it goes down 3% tomorrow, maybe it's going to be at 36.2. Yeah, nothing crazy by any means there. We're still slightly below our 5-year average, but again, that's also taken into account when we were at a 90 times multiple there. And again, I like to look at forward multiple, and I'll be talking more about that in the valuation workshop. People will say, well, Mark, isn't that an estimate? Yes, it is an estimate, but I'll explain why I prefer that within the in that 2-day workshop. Let's go over to our chart really quick to see. I'll make it full screen so you guys can see it better. Let's see where Nvidia is from a chart perspective right now. So again, we're closing in on, we just had all-time highs in the stock at, what is it, 180, mid 180s right there. RSI sitting up around 72 right now. So again, indicating that this is a overbought condition. So expect a bit of a pullback. Wouldn't be all that surprising if we do and see that a little bit more. I would look for that first spot, probably closer into the mid 150s, high 150 range is where I would like to dip my feet in if we could get it that low. Post earnings is right now at 175. So again, another $20 or so would be ideal. Trying to be patient. Now, again, how can you be patient when it comes to, like you could be sitting there at the screen going, Mark, it's not going to drop another $20. Well, you don't know that. The same people were telling me that when the stock was trading at 150 here, and lo and behold, a month later, it was below 100. So the people that comment on my videos all the time when I give you my buy price targets that say, oh, you're just wishing, I could go back through all of those and show you instances in where they've probably hit around 80 to 90% of the time. And I don't just hit a trade alert. I utilize options. I get paid to wait to buy a stock that I want to buy at a price that I want to buy it. Options is what makes early retirement a reality. Options is what takes your investing to the next level. I sound like I'm going to be, giving you guys an options workshop sales pitch here, and I'm not. That won't be till later next month or mid part of next month. So stay tuned for that. But again, it's just something. Number one, I think it's fun. I enjoy doing it. Long-term investing, the hard part is that long-term part, the buy and hold part. Buying isn't hard. Holding is the difficult part. Options, I'm constantly flowing through them. And those of you that are in my Options Edge Discord community, you know that I'm putting out almost daily links showing you my trade alerts. Here's what I'm buying. I'll show you when I get out of them as well for profits there. So it's been fantastic. If you're interested in options, definitely check out our Options Edge Plus. We have our Labor Day sale going on right now. All right, so let's jump over to CrowdStrike. So let's take a peek here. Let's jump back in and show you guys the screen. So enough of Nvidia. Let's go to good old CrowdStrike. So CrowdStrike after hours down, same amount, about 3% here. It was down a little bit more earlier on. So you can get your overview over the past 5 years. Let's see. This is the company that's gone from a market cap of $27 billion, and now we're sitting at a market cap a little over $100 billion. So we topped out at 126, call it. That was on the 4th of July of this year. But if we go to investor relations, boom, there you go. That was the report that was sent out today. You can already see the slides that they issued with us as well. So fiscal.ai is fantastic with this stuff. It's a one-stop shop right here, guys. Whether you're looking for investor relations data, whether you're looking for the Q&A section, whether you want to just dive into the actual report, you can find it all right here. And you can see over to your left that you can go back in time into any of those other meetings that they have had from that standpoint. So Here's our report right there. Boom. Let's just click our AI summary button. Boom. This whole entire report, which is 12 pages long, has just been instantly summarized for us. So CrowdStrike record Q2 net ARR. That's something we want to focus on when you look at these subscription-based companies. $221 million, grew 20%, the ending ARR to $4.66 billion. Cash flow, very important to me. Just from operations, $333 million, and a record Q2 free cash flow of $284. Now, in comparison to the size of the company, and when you compare it to the likes of the Nvidias of the world and stuff like that, not huge numbers. But from a company that just turned profitable just a few years ago, from a free cash flow perspective, this is fantastic. Gets the wheels running, and usually we can get up to speed rather quickly. Don't sleep on this particular company here. Two major areas for me, themes continuing to move forward, is going to be cybersecurity, and the other is going to be AI. And I believe cybersecurity can be just as big, if not bigger, than the AI area there. Cash on hand, just shy of $5 billion there. So we could see the ARR we talked about, subscription gross margins, again, very high margin business, 77%, 78% last year, so not all that much change. On a non-GAAP perspective, we're pushing 80%. That's down from 81% in their last fiscal year, Q2 there. We already talked about the cash flow and things like that. So this is a big turnaround story. This is one that pricey, but one that I have high on my watch list right here. And if we can get a dip more than 3% tomorrow, it's going to be one that I'm going to get a little bit more focused on potentially buying. So let's look at revenue, and let me show you guys what I was talking about with free cash flow. So if I go to the cash flow statement, I can scroll down to the bottom. Boom, there's free cash flow. I can see you can build whatever kind of chart that you want to look at in fiscal.ai. You can compare companies. You know, I could compare CrowdStrike to Okta if I wanted to, and Zscaler and Palo Alto Networks. Just a very powerful tool here. So we're just looking at CrowdStrike. The red is going to be the revenues. The blue is going to be their free cash flow. So you can see that this is a company. So we're looking at 20 now. Let's go back. Yeah. So January of 19, free cash flow was negative. This company was spending more, investing more cash than they were actually generating from operating the business. So it wasn't till the January 2020 that they actually started to flip that into positive territory, and it's been growing exponentially higher from there. But we can see revenues. I mean, just 5 years ago, we're at 874 billion. Or million. Today they're at 4.3 billion on a trailing 12 months standpoint there. So fantastic growth continuing there, but quality is fantastic. Doesn't mean valuation makes sense. So let's go take a peek real quick at valuation. So we're going to go back to financials. Let's get rid of our revenues and our free cash flow. Let's go to ratios, and let's look at a forward PE for now. We dive into a lot more of those. Let's peek at this since 2021. Let's take our average, 156. So with this company growing as fast as it is, let's kind of go up on the scale here a little bit more. So 88, still very high. Looking at a PE ratio of 110. So as I mentioned, a very, very pricey stock. PE probably not the best multiple metric to look at when you're looking at these types of high growth type companies. So on a price to sales perspective, we're at 24 times. Let's see how that compares to the average over the past few years, 21.5. So we're slightly above that. So as I mentioned, this is a stock that, as much as I love it, not one I'm looking to particularly buy at current levels, but I do like to see that 3% dip coming. Hopefully it's the start of a little bit more there. So a higher price stock, not one that you want to go out and sell cash secured puts on unless you have a sizable account there. So we can use certain types of spreads and things like that we have done over at Edge Plus there. So that is where we are at on CrowdStrike. One other thing I wanted to mention was we had the 13F filing since the last time we met, and Warren Buffett had put out his latest buys and sells. So we can see he continues to trim his position in Apple, down 20 million there, so, which is just 7% or less. Bank of America, he continued to trim. Still sizable positions for the Oracle. His top 5 holdings are Apple, American Express, Bank of America, Coca-Cola, and Chevron right now from this equity perspective. But if we want to see the latest activity, Lennar, he was buying some home builders. Lennar, and he got himself, I believe, some DR Horton. UNH, that was another new position for him. He bought 5 million shares there. Did he buy any? There it is, DR Horton. DR Horton, he actually, a 1% slice there, so not much difference. So Lennar was the big one that he went in on there. Pool Corp, Nucor, Constellation Brands. So from a percentage perspective there, but again, we like to focus on the large numbers here. So Chevron, he added to 3%. That's a sizable add, but otherwise, any of his large holdings, not much of a difference there whatsoever. Apple announced its September meeting. That'll be coming on September 9th. That's the expectations of a new iPhone, maybe a thinner iPhone where they're going to make it more of a lightweight, which could impact the life of the battery. It'll be the first iPhone, I believe, with their own in-house modem chip that'll be in there as well. Satellite for the wrist. The Apple Watch Ultra 3 is rumored to be coming out. That could have satellite instead of 5G connection there. AirPods heart rate. So not only will you have electromagnetic stuff going through your wrist, but you can have it going right through your head if that sounds appealing. Not all that appealing to me. Some new Pro camera designs, color cases, and things like that. So September 9th, if you've been in the market waiting for a new iPhone, will we get any commentary around AI? Because this has really been the key loser in AI. They're starting to team up with Alphabet there. So I'll be interested to know some of that AI type stuff there. So Apple has been gaining a little momentum. But again, if you guys recall, I sold the stock at $240 on January 3rd at the start of the year. So still waiting for a good entry point to get back in. And I did sell a cash secured put on the stock here more recently. So, well, that is a lot of information. We are at over 40 minutes right there on today's stock market after hours. So again, as I mentioned, our 2-day valuation workshop starts today at 8 p.m. Eastern time, 5 p.m. Pacific. So make sure if you're not part of that yet, whether you can join us for the live portion or you just want to watch the recording and take it at your own pace, you will get access to the recording, the slide decks, and everything like that. So definitely check out the remaining 4 spots that we have there down below. If nothing pops up, that means those 4 spots are gone, and you can sign up next time we have that valuation workshop. But these you do usually sign up or fill up rather quickly there from that perspective. So any questions that you guys have, I hope to see you guys over at, as the Jay said, hit that like button. I always appreciate that. The AI sector has been a leading bull market for 2 years. Seriously, I'll buy more if it goes down to 140. There we go. Let's see, just browsing through. Mark, how do you balance your core safe plays like SCHD with riskier bets? So I have a strategy for my portfolio. I know that I'm only going to utilize, upwards of 10% for either speculative plays and option plays and things like that, to where it just doesn't get overextended. And that's the key thing for people, is they can ride waves for a while, and then their problem is they don't take a step back and look and go, oh, holy smokes, I have a super high risk portfolio right now, and if stuff hits the fan, I could see some major losses rather quickly. So it's important to always take a step back every quarter or so and make sure that what your strategy is aligns with what your actual portfolio is. Because I go through and work with my students on my 6-week investing accelerator course, where we kind of dive into their actual portfolios. But first, before even looking at their portfolio, we carve out and build their customized strategy. We'll talk about risk, time horizon, overall goal. They'll answer all of these questions. And then we look at their portfolio and I say, well, this looks like it's managed by a completely different person, because what you told me over here, that doesn't look like that portfolio. But that's why we do it, so that we can start talking about what's reality, what do you have, and what are you hoping to have, so that you can mirror those together there. So, well, awesome. Well, it has been great to be back with you guys. Any of these valuation type questions I will be answering for those that are taking part in our valuation workshop. Also, if you guys are looking to join any of our subscriptions, whether it's the Edge Plus, where you get access to my portfolio trade alerts, our weekly Edge report on what to look for in the market, or if you're interested in options, we are starting our Labor Day sale. So be on the lookout for that. If you're not yet on our email list and you've been waiting to join, you can get yourself 20% off for a few days here through Labor Day. So it is great to be back with you guys. Hope you guys are all doing well. And with that being said, hopefully to see a lot of you over at our valuation workshop that'll be starting in roughly an hour and 15 minutes. So good to be back. Hope you're all doing well, and we'll see you next week. Take care.